Hey everybody, hope you're doing great. Hope you had a great week of trading. Today, Prep to Grow is going to cover the Qs for the week of March 22nd, 2021. Everything we talk about here is based on data and information that comes out of our AI and big data platform called Grow. And we certainly go into some pricing details and all that. So just view this as our recommendation. If you like this information or you like this topic, please like and subscribe. So let's jump into it. So last week we predicted a small bull. We talked about there would be a tight trading or tight price throughout the week that go up and down. Certainly started the week off with a bang with a big bull, about 2-3%. It was up, and then ended the week down half a percentage point. So not quite up where we expected. Certainly expected it to be up 0.65%, not down 0.65%, but the bands were real tight at the end of the week and some pullback because of some macro conditions. This week, you're expecting it to be flat, or the week of March 22nd. So again, not a great week for the non-weekly option players. We do expect volatility this week. There has been some good news in the Qs in general. Their NASDAQ-100, they continue to grow. There's a sweet spot happening within the NASDAQ-100 or the Qs where company growth is greater than stock growth, and that's what Prep to Grow buys into. That's our algorithms. That's what they predict when they find a company that is looking like that. It's a huge buy for us, and so that's where the Qs are at. The biggest challenge is the macro conditions or companies that are outside the NASDAQ 100, where their growth is far less than stock growth, and that's a major concern. If you look at Michael Burry and the issues and concerns he's raised over the last 2 weeks, this is certainly one of the factors, right? The numbers that we're seeing here is from March of 2020. This occurred, or what was the mid-year pullback because of macro conditions was really hit in June, July. So this month, we're still looking good from a yearly growth perspective. So year over year, this is good growth. So we should expect that while still good growth, the companies that are not NASDAQ 100 related have hyperinflation in terms of their stock price. So is there going to be a pullback on that? If there's a slowdown or growth doesn't continue at its pace, there's going to be a pullback for sure. People see this, they track this. So be cautious. Don't do anything too long. Option players keep it a little bit shorter. People that are long-term stocks and ETFs and that kind of stuff, just be wary and pull out if you start to see signals that this is going to go south. Unemployment rate, while it's better and certainly on track to hit a 4.5% at the end of this year, it's all about the pace. And so it's a red just because there's still high unemployment rates and high weekly claims. So it's still a red, and there's certainly concerns there. So let's jump into the details of this. So if we look at stock growth, so it's still up 38% over the last 12 months. It pulled back week over week about a half a percentage point. Year over year for our growth projections it's up 31%. So there's about a 3 to 5% bump that should happen on the Qs in the short time frame, usually within the 90 days. Analyst projections are a little more subdued, although up week over week by 1%. Now, the analyst projections may be just looking at some other macro conditions and not just looking at the Qs specifically. We certainly take that into account. But if we're looking at just company growth to stock growth, which is really what Prep to Grow does, there's certainly a 3 to 5% gain that could occur. Again, the big gotcha is will the macro conditions play favorably to the Qs and the NASDAQ 100? And that's a huge question. So who's announcing this week? Adobe and Paycheck, two great companies, and Walgreens and Micron next week. So a little more upbeat on the Qs in terms of announcements, which is exciting. So let's just jump into Adobe and Paycheck and look at them. For those of you who don't know, this is the Prep to Grow platform, Grow. So if you are looking to find out which Qs or any NASDAQ company announcing over the next 3 weeks, all you got to do is just go down to the ETF selection, click Qs, Are they announcing the next week? Hit apply. And you'll see anybody that's announcing. Right now it's just Paycheck that we're recommending, but we're going to cover Adobe and Paycheck. So let's take a look at them. So Paycheck, Adobe. Let's cover Paycheck first. This is a recommendation we made last week. There's an option. It had, not quite unusual option activity. Usually it's 1 or greater, but it's getting close to that. Just for background, I'm jumping ahead a little bit. So just for background, Paycheck, PrepToGrow's been tracking since 2017. They're based in Rochester, New York. They're announcing their Q3. They're in the HR space. They're a lot like Gusto and ADP. They really serve the small SMB market, the small and medium-sized market. They've been recovering over the last couple months since the pullback, but they are not growing like they did since we started tracking them. They've had a pullback. Not surprising, the HR space is a tough market. You've seen the big players like Workday, SAP start to move down market a bit, and that's causing a general back for traditional players like ADP, Paycheck in that space. And with new entrants like Gusto, it's certainly putting pressure on the traditional vendors that have really dominated that space, such as Paycheck. Because of those factors, the algorithms are picking it up and really expect that there's going to be a pullback of about 5%. And this is an option, and this is for the August 17th, 2020 option at the 65 strike price. It costs you about $105 if you buy in more appropriately. Again, we see Paycheck not performing that great in terms of their earnings. Unfortunate. I like the HR space. Paycheck has been a good company in that space, but certainly looking at 5% pullback, and they should have a relatively rough earnings. Not dramatically rough, but a rough earnings announcement. Next is Adobe. Love Adobe, use Adobe, San Jose based, right near my alma mater. One of the companies that really led the drive to moving from a flat cost for a desktop software to a subscription cost model, so monthly. They're really pioneered that in the space and generally in the space. So for those people that really hate monthly subscriptions, Adobe was one of the main companies to blame for that. They proved it out. They were the most successful with it initially and really drove everything forward from Microsoft. As they moved to their Office from a one-time payment to a monthly subscription, it's really probably based off of the success of companies like Adobe that just pioneered it. So Adobe, with that change, certainly really helped the revenue numbers because it increased it quite a bit. So from the Q perspective, they account for 1.81%, so a good chunk of the Qs. They're going to announce on March 23rd. The analysts are expecting a 563 price target. They're currently at 441. We expect them to get to our price target about 501. So not quite as aggressive as the analysts. Adobe has been doing well, but they aren't at an all-time high, which is what the analysts are really projecting. They're great, again, great products, great company, great revenue, growing very well. We bought them. I bought Adobe, or wasn't recommended as a strategy, but whenever Adobe comes up, I typically always buy them. I bought them. It sold last over 2 weeks ago. Great company again. Typically, we're pretty accurate at these guys. It's about 80%. Not as accurate as Paycheck, which I think was near 90%. But for our stocks, anything really 75, 80% or above are very accurate. So typically buy almost everything that comes up that high. Adobe, looking good. Expect a 13% bump from them. Great company. Should have a very good earnings announcement. So let's jump into the rest of what's going to happen for the week and just some other conditions about why we're predicting a flat for the week. Here's the yearly earnings per share, and this is from the analysts. This is a separation between FANG and non-FANG. 15 companies really drive the FANG and the Qs in general. These 15 companies make up 65% of the total holdings for the Q. It's pretty pretty high skewed toward those 15. Adobe is one of those 15 companies. So if they have a good week, the Qs should be impacted. It would be a good sign for everybody. Not a lot of movement on the FANGs. It's been flat from the analysts for the last couple of weeks. We should expect a better movement in that, but the analysts aren't really jumping at their growth. Analysts are jumping at the non-FANGs. Certainly a big bump over the last 15 months. Probably about a 20% jump, which is good because these guys have been growing pretty well. And so it's good that the analysts are starting to recognize that the non-FANG, there's a non-FANG, a non-Amazon, a non-Facebook, a non-Google world out there. And these companies are really the backbone for the NASDAQ-100 and starting to drive it more and more. So let's jump into, is it going to be a bull or a bear? And the reasoning behind that. So this is our 30 days predictions. When we start to look at the pullback signals going into late Feb and early March, we started to pick them up mid-Feb, certainly for the non-FANGs, but started to pick it up for the FANGs as well later on. And that's our predictions around the pullback signals around. We predict more options than calls, and when there's this many puts that are being predicted, there's undoubtedly a pullback coming back. We picked this up in February. It was about 90 days out, so there's a big pullback when that occurred. As we look through this, it looks like the pullback is done. Things are kind of in harmony within the NASDAQ-100 Q world, and things should be flat. Again, not great for option players, which is okay because of the macro conditions and some overinflation on stock prices outside of the NASDAQ-100. Again, use caution this week. In the coming weeks, don't stay too long on the options or the calls just because of that, and make sure you have downside protection because of the overinflated stock prices outside of the NASDAQ-100. We're going to skip that last slide, but hope you have a great week in trading. If you have any questions, as always, reach out to us at Prep2Grow, contact at prep2grow.com, or go to our website at prep2grow.com, 2 being the number 2. If not, have a great week and happy trading. Take care.